So in a sense, the way I trade is like similar to everyone else. I'm quite would I say obsessed with catching the expansions and being part of them. And in order to do this, I mainly implement the idea of EO and dark pools to stay on the right side of the market. So I mainly trade the DAX due to work commitments. So for me, my key levels are always the previous hour before the market opens on the DAX and the daily high and low of the previous day. So those three would always be on my chart somewhere. And around the previous hour, I'll use the idea of EO and the last expansion to frame my ideal. So now that I've explained that, I'll go to the beginning of the week and let's see how the market played out. And so for me, in regards to time frame, I literally stick on the M5 and M1 um, hourly in a sense because I use the previous hour high and low as levels as well. But if you ask where do I mainly stay, it will be the M5, M1. So I'm going to clear everything because my model is quite simple. So I do remember, or I can easily find all these lines. And so my laptop's a bit glitchy as well. Okay, so this is Monday, beginning of the week. And like I mentioned, straight away, I'm going to find the previous hour, which is up here. That's the previous hour high. And then I'm going to find the previous hour's low, which is this one here. Also, I'm a United fan, so you would have the match in the background. So I do apologize.
Oh my God, you
And
like pain.
and now that this is here, this is the previous hour. Sorry, my throat. This is the previous hour, and then this is the what's the day? The previous day low is somewhere here, but I wouldn't if I was in a trade, I wouldn't be monitoring by the time it gets to here because of work. We know the previous day high is this is 12 here. Someone just say somewhere around there. So when I come onto the chart at this time when we open, this is all the information I've got. Um, I don't like trading the first 2 minutes of the opening because of volatility and similar to Kish, I just want a bit more information on that first M5 before I start pressing the button. So let's assume I missed this first sell from here and just read it. What we've got here, according to the model, is before market open here, we started a bearish expansion simply because we have two bearish candles closing below each other and so on. In regards to the previous hour, the most recent expansion I see is this one. This was the last expansion in the hour as well. So it began here, it ended here because this did not close above there. So in regards to whilst this M5 candle is being produced, where I'm watching, you've got this tiny FEG here, tiny one here. Of course, in the first M5, we closed both of them. So this is more or less looking very bearish to me. Close it here. This is the sponsor leg. This is the EO candle, which also closed the low of the previous hour. And because this is, assuming we're sticking onto the M5, because this is the EO candle, I want to, if I am going to sell and engage in a bearish market, I want to sell above EO, which is above this candle's high. If I'm bullish, I want to buy below EO, which is below this candle's low. Using swing patterns, as in first three bar high and first swing bar low, as call it early confirmation or early entry fractal, if you want to call it that, I will be looking at the first swing high here and the first swing low here. So EO produced here, second candle that got produced, nothing's happening in regards to let me put a line here and there so we can easily see it. So nothing's happening here and here. There you go. So in these two orange lines, nothing's happening. Before we get to swing low, we got to swing high. So one, two, three, right above there. Nice swing high. If you want to look here as well as this is also a retracement target. Your retracement targets for your FEGs and your expansion, there's nothing that says it has to touch 50%. There's nothing that says it has to wick through the gap. All it is if we're going to retrace in this bearish expansion, it will happen within this range from this low to this high, which it did here. So swing high produced EO right there above EO. If I'm looking to sell, I want to sell there. I believe I took this on a demo, so I got in somewhere there, and I typically aim for 20 points. That's my bread and butter because I have very tight stop losses. So unlike everyone else who likes 20, 30 stops, I hate them. My typical stop is about 10 or 15. I really get anxious when my stop loss is wide and I don't like it. It's never worked for me, so I found a way that works for me in regards to frequency of trades and risk management. So if I just show you how many points that would have, assuming I'm going there. So there, that would have been around 17 points. Without going to the M1, I know for a fact there's probably something here on the M1 that would have allowed me to go on something like that. And I'm aiming for 20 points. So 20 points there. So this would have been my trade of the day on that day. I am starting to now expand myself in regards to aiming for 50 because I say 20 because of work commitments. But yeah, just following this in regards to when we would have anticipated like where invalidation points would have been. Because this is the EO candle we're using, both sides of EO must be rated, which it did. And then the swing low wouldn't have been this because this candle was part of the swing high. So our swing low didn't come in until this would be your swing low because you got 1, 2, 3. That's the lowest point with those two above it. And then that's the swing high. So this is your, call it your dealer range from there to there. And then I'm just trying to think of what else to share. Oops, sorry. I'll leave it at that for that day. I'll just go to another day just to kind of explain more. I want to get different examples so I can show how I get involved in a continuation move when I am on the wrong side of the market. I hope this day shows it. So again, we click everything. We've got market open here on the DAX. Previous hour high is yep, this one. Previous hour high. Previous hour low is yep, this one. And then market open. Before the market open, we didn't really have much of an expansion apart from this was the only expansion. Well, these two expansions here were the only ones within the previous hour because you had bullish, close above it, expansion by definition, expansion stops, starts another one by closing above the previous one. So these are your two expansions. But I wouldn't really be paying attention to this one because you did have your pre-expansion right when you're right next to each other. So keeping that aside and just looking at the key levels of the high and the low, before we open on the in the German market, we already started going down. The first M5 of the German market closed below the previous one, starting this sort of expansion. And then expanded, stopped. So if for whatever reason I was, let's say, bullish in this market, and this expansion is going lower, and we have stopped here, I start looking at the next candle. Wait, give me a second. I've got it all written down, so I just need to double check the definition before I say something. Yeah, so I start looking at the next candle after the expansion. So the candle that stopped the expansion, basically, because this one closed below the other one. It's not this candle, it's this one, because this one did not close below here. So now this candle starts framing a lot of information for me. Its high and its low are where dark pool will produce. So if I am bearish and we've retraced here, and there's nothing like a FEG in this expansion like there is in here, that I could say, okay, we retrace in here, CSD, I'm selling this candle retracement. Because none of that is happening here, so I start saying I need, oops, where is it? I need a candle high to be below this low, because that's where dark pool will produce. And whatever FEG or whatever ranges between this candle's low and whatever candle's high is produced there, retrace any CSD in that space, as long as it's not closed, I will sell it for continuation lower, because this is telling me it's a bearish market. This is a retracement, but this retracement didn't give me anything to get in from lower. So I start using this kind of to frame everything next. This same candle will also frame me getting into longs. So if I put that there, assuming I'm just following this model, I'm not looking at anything else like previous day low, whatever. I've got this candle's high here. We've traded above, put a low here. So whilst this is happening in real time, assuming all of this hasn't happened, I would be watching this candle to see if we can get a CSD of it. This candle closes below where this low was. So we had that tiny FEGE. Let me put it here. So this here was my dark pool. Right there. That is the dark pool. This candle closed it. So now this candle's closed it. I am still not under the pretense of, okay, this is looking bearish. So because this is looking bearish because of this candle closing where I expect the price to hold as support, this could have been a sell from there to there. And the reason I'm saying from here to there is because, again, if this market is bearish, I need that candle high below here to show that we are bearish. Assuming I'm holding for whatever reason and, we're not getting that high there. So this has happened, this is retracing, I'm still holding, thinking it's going to continue to sell. You've got an FEG running a previous low. This first gap there, that's your breakaway gap, or where your breakaway gap should form, if we're going to read it like that. And then this closes it. You didn't get a CSC of this candle with a bearish candle. You got this a wick to, yes, but then it closed bullish, so I wouldn't call that a CSD. So then you've got this close showing bullish prices. That's just little intricacies. Let's say you don't even look at that. And then you've got this gap here that you were previously using for your dark pool. You get the close above it again. So now you're thinking bullish again because you've closed the gap. So when you, well, actually, no, sorry, take that back. You're not bullish until this candle's high is closed above, which it is there. And then you get that retracement into it. So this is your order block. Because what dark pools are, they're fair value. They're fair valuation for price. If you're looking to buy, you want to buy at fair value. If you want to sell, you want to sell at fair value. So when this has happened and you've closed above there, this candle here is in fair value. So this makes sense with your stops there. Just looking at it again, we closed it, retraced. Me personally, I would have been buying at this level here. So when this came back in, buy there, stops there, makes sense to me. Reason being is because now I'm anticipating this to hold price higher. Oops, sorry. I hate this thing. Let me just move for myself then. So there we go. So I'm expecting this to hold price, especially as we've come down to the low here where I expected the dark pool to be produced. We're not producing it. All of this, you can say it's a BPR down here. There's no reason for us to close below here again if you are truly bullish. That's how I see it. And then obviously you get a nice run of about over 100 points, I think. Yeah, thereabouts. And then I'll go to another day. Just a little context for why I trade this way. I believe I shared this with Ollie before and a few other people. My problem when it comes to, I say problem, but my trading style is I'm not impatient, I wouldn't say, but I hate being wrong and I hate not being able to capitalize on moves. So I like to be able to see when I'm wrong quickly and get into the reversal or the continuation if I was wrong. If whatever I believed was wrong, I need to be able to correct it and get involved to capitalize. Again, I'm not saying this works all the time because it is very, what's the word? I wouldn't say you shift your goalposts, but it requires, sometimes you'll get quick entries, sometimes you don't. And it gets frustrating when you're not getting the entries you want. But anyways, continuing, moving forward, sorry. We've got previous hour high here. So being that kind of there. Previous hour low, right there. So looking at the expansion, we've got no clean expansion here, I wouldn't call any of these clean because you had this one here, but yes, you got these two expanding within this candle's range. I'm not considering that exception because we are still within this range. So I'm looking at yeah, in that previous hour, there's nothing clean for me to use in regards to previous expansion. So I'm using it slow and high to frame key levels. We've got opening candle here, opening, trading down, wicking straight up. And then we get the next one closing below the previous hour, which is right there. So by definition, this should be our EO. If this is our EO, and let's assume I am bearish because we've been tanking before the market opened, I want to sell above here. If I'm looking to sell above here, this is standing out to me. This 2-bar expansion, sorry, ignore that. This 2-bar sorry. Yeah, sorry. So close here, this is here. I'm looking to sell above this opening price. You've got the simple way, which is a 3-bar high above EO, which I don't get. Yeah, I don't get that at this point in time. I don't get 3-bar low either, but instead we just went up and down and then continue trading away. But as we're trading away, we started a bullish expansion, 1, 2 there. The swing high above EO first comes in right here. I'm just double checking to see if I'm correct. Yeah, comes in right here. But yeah, it comes in right there. But then yeah, like I said, I'm watching this gap because this took down that swing high. We get the close right. We don't, let me see if it was a close or not. I'll say this was a close. If I was looking at it, I'll say this closed that gap. So now I would switch to thinking, okay, this could just tank, especially we traded here. We've closed that. And there's nothing instinctively telling me go higher. This close, probably would have taken a loss here if I shorted the equilibrium of this somewhere, put stops there, that would have stopped me out, of course. But then, like I said, you've got this bullish expansion starting here, this stopping the expansion. And this is why I was saying that I most likely wouldn't have gone into something here. So right there would have been where I would have liked for price to retrace into, I get involved and go higher. Again, with this style of trading, one thing I found is that you need to be very it's hard to be consistent when you have different types of key levels. Because what I could have also done was taken this 2-bar expansion, this stopping it, calling this to there, your dark pool, the closure here, again, I wouldn't have gone an entry, but there's so many ways for me to frame where I could have gone in for price to go in. I do think this day barely any retracement happened. They just, like you can see here, just rallied all the way above. And yeah. Anyways, if I'm not making sense, please someone stop me because I'm not very good at explaining things. But yeah, this day was very choppy. So I think it'll be a good example to show how it would have helped me stay out or stay in. Previous hours low right there. Previous hour high right here. Cleanest expansion in the previous hour, 1, 2, 3, 4-bar expansion right there. I'm gonna put a box here to here. And then we went all the way back to the beginning of the expansion, closing it here. This is my EO because this is a start for an expansion. This closed it. The next candle is EO because this is an expansion range, if I put it like that. If this is EO, oh no, both sides of EO needs to be swept. I like taking, if I get a swing low below EO first, I want to buy. If I get a swing high above EO first, I want to sell. Obviously, this I combine with whatever other confluences I can see on the chart. Given everything has been closed here, there's no other confluence. If you want to keep an eye on the first FEG in the expansion leg, and the only one actually being this one. You want to close above here to close above this candle, sorry, to buy. So which you do get, you get that close here, retrace, buy. Me personally, what I believed I was looking at, this was a large range by my definition, a large candle, sorry. It closed there, closing above 50% of it. I was very happy to start buying early, below 50% of its range. That's just added confluence. So because this is EO, we don't get a swing high there. We do get a swing low here. 1, 2, 3. This being the lowest. This has a nice high wick there. If you wanted to wait for 50% of this to be closed, which I believe I did, 50% of its body right there. So when we closed there, retracing of there, I was in, stop loss there, and that rest was history. If you wanted to play more conservative and wait for a close above its open price, which we closed there, this retraced, stops there, off you go again. If you wanted to use the one that closed the bag, you get a close here, retrace there, rest is history. Okay. And that was Thursday. And then come to Friday. Friday was difficult because the whole week I didn't actually trade. Friday was the only day I traded. I mean, the other weeks I was trading on demo. Friday was the only day I traded on my actual account. You can even still see I've got the alert there. But just walking through Friday's trade plan, we had low here, previous hour low, previous hour, would it be that? No, it's right here. Previous hour high. Sorry. And then cleanest expansion is right here. We open up, of course, over here, traded all the way down, closing all the expansion. Within that expansion, you've got second FEG there. You've got first FEG there in the bullish expansion within the previous hour. And then easiest thing that I'm even seeing right now, but I wanted to buy it because I remember seeing this on the M1 we closed above, so I was thinking I could get early buy stops there. I got stopped out. But just looking at the fact that this was the first FEG in a previous expansion, this closed it, signifying bearishness. This opened, traded into it, and continued selling off. My short came from, where did my short come from? Trying to find it. Sorry, I need to look onto my thing, onto my trade executions, just so I can explain properly where my short came from. Give me a quick second. Yes, sorry. On my, why does it look like that? It looks very different. On my feed, this gap, on my trading feed, this bag that was here, when this candle traded up, it went into here again. So I shorted this to go lower. But if to say I wanted to read it the way I've been reading all the other days, previous hour there, closed it here, EO here. Your first swing high was this one. So it makes sense. Swing high here, probably unless you were going down to M1, you probably wouldn't have gone into the first push down. But staying on to M5 solely, you get a swing high here, trade all the way down, get your swing low here. Classical DR execution. Given this is EO, swing high above, swing low below, retrace above EQ, short. And yeah, that's my week capped. Any questions?
Why do you count the three? You see, you said earlier. You said what? Three expansion candle or four expansion candle? Why is that important?
So it's not necessarily the amount of expansion candles. I just see expansion by definition is at least two candles going in the same direction, closing above the previous one. So in this case, one, two, three, that's a three bar three candle expansion. I don't care how many candles it is.
No, I guess what I'm asking is like, what role does that play in your decision making?
Okay.
Or, you know what I mean?
Yeah. So the role it plays in my decision making is because when I began, I said we all seem to want to be catching the expansion. So I need to know where the expansion started, where it's ended, and within where it started and ended, what information is in that range that I can use to get involved in. So we know the first FEG in any price run is your bag. The second one is where you expect retracements to come into. Anything else is pretty much irrelevant. So if I know how many candles is an expansion, I know where my first FEG is, I know where my second one is, I know where I'm paying attention. If I know where the expansion stopped and where it began, I know where I'm paying attention. These are levels where I want to make decisions in. Does that answer your question?
Right. That I get it now. Especially with this last example. So technically, it's like if from the first and second FVG you had some sort of I don't know retracement in there CSD, you would have been bullish. But
Yeah.
because we reversed it, it becomes an inversion. I got you. I got you. I got you.
So literally, I said in here I took a loss because when this candle closed, I was what I was anticipating was close above this candle and then continue the bullish sort of delivery. So on the M1, when I got a close above 50% of this candle's body, I was seeing it as an early buy. So I was allowed to take that because the risk on this was pretty much nothing. Again, I like to take at least 10-point stops. That's my comfortable range. So I think the stop on this was lower than 10 points. So when I got involved and I got stopped out, I was like, okay, cool, I'll wait. Because clearly it's not trying to CSD this.
So in this, you do not trade the one. You don't go to the 1 minute. You stick to the 5 minute. Yeah.
No, no. So I was sticking to the 5 minutes because of explanation purposes. For me to go down to the 1 minute and break down all sort of things I see and the way I trade this, to its full extent is a bit
Yeah. Yeah. I got you. I got you. I got you.
I'm not good at explaining stuff originally, so I don't want to go
Yeah.
one. So I
Got you.
have
Got you.
5 minutes just to make it easier for me to explain what I'm seeing. And again, the reason I actually go into the 1 minute is because I like to what do you call it? I don't want to have big stops. Like I'm adamant I don't want big stops. I understand the benefits of it. I understand, people have different takes on it, but me personally, 10 points, 15, maximum 20 is what I'll do. I will not put a trade more than 20 points. I'll rather miss the trade.
Yeah. I feel that. That's what I was saying earlier. Like, I like if I'm gonna get stopped out, I want it to happen immediately. I don't want to sit there in the drawdown and watch my money in the red, like that kind of stuff. So I get that. But recently I started to expand my stop loss and trying to force myself to, you know, to appreciate it. But I'm not gonna lie. It's a nightmare, man.
No, I can't do it. And because I as
One
well.
question.
Yeah, go on.
I draw a line there. This is a former, what is the name? Barricade, right? Bullish barricade. Okay.
Okay.
Do you count this also as a inverted barricade? You know what I mean?
I don't
Or
trade trades, so I wouldn't know. I wasn't there when it was taught, and because I wasn't there when I've never considered it in my decision making process. So you would have to,
okay.
yeah. If you explain it to me, I might be able to, but I don't know.
Yeah, I mean this former bullish barricade when it closes below, it's inverted. So we can use it as also as a PDOA to short.
So where does the barricade start and end? What makes it a barricade?
Here, the light, this
Is it the open?
line.
Is it the open or of the bearish candle or the?
It's the Kish barricade. The open of the bearish candle, exactly.
Okay, so the barricade
This
is
is the Kiss barricade. At this point, normally we long, but when it closes below, we are bearish. And when it retest, I see it as an inverted barricade, and also a very strong either way to short.
so what by definition, if you were to use words, how would you define a barricade with words?
This one, this line, this is the Kish barricade definition of barricade. This when two consecutive candles, when the next green candle, this is an entry pattern for entries, bullish entries, right? Price comes down. At this moment here, you can enter long if price closes respecting the line. But in this case, it closes below it. So we are bearish, right? But when it comes back here, then I use it as an inverted barricade.
So if I'm understanding correctly, your process in regards to barricades will start from here. We traded down.
Yeah.
This candle here closed above. Okay, let me do this. This
The
candle
green candle.
closed
The
above.
green candle.
It closed above the last bearish candle,
Yes.
and
And
then
this is the entry pattern which I learned from Kish. This is a fractal which is for entries, but it has to be respected at this line, and it didn't. So I use it when price comes back as an inverted barricade, and I backtested it, and it's very strong.
so if I'm understanding what you're saying, this line here, this is a bearish expansion. We close above the last bearish expansion high within this expansion here in this orange line
Yeah.
here. If we are to be bullish, price should respect this line by not closing above it, below it, and then price
Yeah.
should do something like that.
Yes.
But in this case where price has come back to this line, so we've come down and we've closed it, you're saying
Yeah.
now this level is inverted.
Yeah. Yeah. Yeah.
Okay, perfect.
Exactly.
Thank you. I'll put that into words and I shall also be back testing that. Thank you. Any other question? We've got about 6 minutes. Or should I just end it short? No? Well, I'll end it. Yeah?
No, we've talked about this before, so I don't have.
Yeah.
Nice.
Well, yeah, that was my trading week capped. I mean, I was quite annoyed because I hate looking at the charts on days I don't trade. Because if I'm seeing things I can't take it because of work commitments, the next day when I tend to trade, I tend to get very trigger happy. So I'm very big on confirmations before I get involved, especially where I play both sides of the market continuously throughout the day. But yeah, I'll end this now. I'll get the video downloaded. I'll send over to Olu and he could post it onto that YouTube channel that he created. But thanks everyone. Bye.
Thank you so very much.
It's all right. Bye.